Welcome back to Market on Close. We'll be watching Reddit after the bell today as the company will report earnings. Estimates calling for 96 cents for EPS on revenue of $667.48 million. The stock has been hit hard so far in 2026, shares down more than 30% already, but the company has topped EPS estimates in each of its last 4 quarters. Reddit, of course, our choice for options corner today, here to help us take a closer look. Rick Ducat, our lead market technician here on Schwab Network. Now, as we look at Reddit, it's one of those companies where when we try to hold it up against any competitors, it's sort of a tough one to go side by side with. But as we look at it more broadly against the market, how is it stacking up?
Yeah, the social media area has been one that's been pretty interesting to follow lately. Reddit in particular has not done very well versus the broader market. You can see it's far underperformed the communications sector and the S&P, which are both around 12-13% up during the past year. Meanwhile, Reddit down about 30%. And when you look at this space, just in general, the trajectory is pretty similar for many of these names here. Now, Reddit makes almost all of its money through advertising. Meta earnings showed a good environment for ad spending, so that's maybe good too. And a lot of the problems with this whole kind of software space in general have been AI disruption. Reddit is kind of interesting, though. It's kind of unusual, as you said, Marley, because it's kind of more of a site where you get a lot more genuine human insight and interactions with the users here. So perhaps a bit of a different beast in general is this particular one. Nevertheless, a tough environment. Snapchat down 51%. I didn't even realize it had been that severe.
Yeah, it's certainly been an interesting setup for some of the socials here. You know, Reddit I would put in a slightly different camp than some of the socials. So if we just look at it on its own, you know, knowing that it's been beaten down so far this year, I mean, you can really see pretty severely to the downside here. What is the technical setup going into earnings?
So this is one of those charts where we see the gaps have come into focus here. The place at which we've solidified during the past couple sessions near 150 or so, if you were to backtrack, that's about where we formed an earnings gap to the upside 2 quarters ago. We can also see 178 where that gap began the next session here. That was a supportive area. That was another breakdown point as well. So 150 to 178, that's a shorter term, closer range to be on the lookout for this earnings event. To the downside further, 127 to 133 stands out. That was a frequent ceiling here, and as well as another gap area here. So that could be another support zone for the bulls to keep an eye on if things do start to go awry. We can see that the price trajectory has been within these 2 white downward sloping trend lines here, giving us this very narrow, tight channel type shape here. So one notable development is that we crossed below our 251-day exponential moving average, our long-term yearly EMA in orange there. That comes in near 183 right now, so that could be a resistance point to keep track of going forward. The longer term the moving average, the more significant it is when it's eventually breached here. So that was not the best development for the bulls, to be sure. We can also see a very oversold RSI. 21.6. RSI only goes as low as 0. So a reading in the 20s, the low 20s especially, is not really something you see too terribly often, relatively speaking here. So finally, when we look at our volume profile study, heavy volume concentrations come in here between 140 and 150, and then an even bigger one here between about 107 to 123 or so, the point of control coming in right around 115. So those are the heavy trading areas to be on the lookout for.
And as we look more specifically at the options action coming into earnings after the close today, did we see increased activity in this name?
So it was a bit of increased activity. 1.73 was the sizzle relative to the 5-day options volume. What we saw for the expected move February 20th, 15 days out, that was our most active from the perspective of open interest here. So that came in roughly a plus or minus 19.5% move. So a pretty sizable move. Notice the lower end of that boundary lines up with our supportive zone that we pointed out earlier. But one big notable trade I saw, the trade in question was selling puts February 20th, 150 strike puts, minus 1,500 of them for a $12 credit. Seemed like it could be an opening trade. It didn't match up very cleanly with any of the other previous trades that had occurred, but it wasn't exactly clear.
All right, well, we will have Reddit in about 20 minutes. They'll be bringing out those earnings 25 minutes here, and we'll have them live for you on this show. But I want to thank Rick Ducatter, lead market technician, for breaking down the options activity we're seeing in advance of that report.